Welcome back, traders. In this video, we are diving into a game-changing tool that can give you an edge in the Forex market, and that is the Speculative Sentiment Index, or the SSI for short. Now, this indicator helps you understand what retail traders are doing and how institutional traders might be positioning themselves against them. So most people trade based on what they think the market will do. But what if you could see where the majority of traders what if you could see where the majority of traders are actually placing their bets? That's exactly what SSI helps us do. We are going to break down how the speculative sentiment index works, why it is important, and how you can use it in your strategy. Before we get started, make sure to hit that like button and subscribe for more trading insights, okay? Let us jump right in. Now, first of all, let us talk about what the speculative sentiment index actually is, okay? The SSI is a contrarian indicator, right? It's a contrarian indicator, which means it helps traders identify potential reversals by analyzing the positions of retail traders. In simple terms, it tells us how many traders are buying versus how many are selling a particular currency pair. For example, if SSI data shows that 80% of retail traders are long on a currency pair, that could be a red flag. The market does not move based on what retail traders do. It moves based on institutional money. And if too many retail traders, or rather, if too many traders are on one side, big players may be preparing to push the price the other way. The idea behind SSI is that the majority of retail traders are often wrong about the market's direction. So institutions use this to their advantage. And if you know how to read SSI correctly, you can avoid falling into the same trap. All right. Now let's break down how the speculative sentiment index actually works and how you can use it. Okay. SSI is usually presented as a ratio that compares the number of long positions versus short positions. Now, if the ratio is above 1, it means there are more buyers than sellers. Retail traders are mostly going long. But if the ratio is below 1, there are more sellers than buyers, meaning that retail traders are mostly going short. Okay? A strong bullish or bearish bias from retail traders is often a sign that the market might move in the opposite direction. So let's say 85% of traders are long on Euro USD. That means most retail traders expect the price to go up. But if institutions see that the majority is long, they may start shorting the pair, leading to a price drop. This is why the speculative sentiment index is so powerful. It gives you insight into where the crowd is moving and helps you position yourself alongside the smart money. All right. Now, let us talk about how to apply the speculative sentiment index in your trading. Okay. The first step is to check the SSI data. All right. You have to check the SSI data. Start by looking at the SSI ratio. Okay. Start by looking at the SSI ratio for the currency pair you are trading. If you see a strong imbalance, such as 75% of traders being long, it might be a signal that the market could move lower. The next step is to look for confirmation signals. Don't trade solely based on SSI, okay? Combine it with other indicators like support and resistance levels. Check if price is approaching a key level. Also, look at trend analysis, look at the overall market trend before making a decision. Watch out for momentum indicators. You can use RSI or MACD to confirm potential reversals. Okay. For example, if SSI shows extreme bullish sentiment, but price is hitting a major resistance level and RSI is overbought, that is a strong sell signal. Okay. Also, trade with the smart money, not against it. The key takeaway here is do not follow the crowd. Retail traders tend to lose money because they trade emotionally. By using SSI, you can align yourself with institutional traders instead of getting trapped in false moves. Okay? So, before we round up, let us just recap why the speculative sentiment index is so important. One is that it reveals retail trader positioning, helping you avoid common mistakes. Okay? Also, it acts as a contrarian indicator, showing when the crowd is likely wrong. Also, it helps you align with institutional traders, okay, instead of trading against them. And then it works across all pairs, right? All currency pairs. It works across all Forex pairs, making it a versatile tool for any strategy. So if you are serious about improving your trading, SSI could be worth adding to your trading toolkit. All right. Now, even when using the SSI in your trading strategy, ensure that you always observe good risk management. Okay. Use proper leveraging, use proper risk to reward ratios, and try not to risk more than 2% of your account balance in a single trade. It's very, very important. Okay. So that is it, traders. That wraps up this deep dive into the speculative sentiment index. This indicator is a valuable indicator if you know how to use it properly. Instead of following the crowd, you'll be trading smarter by understanding where the market is really headed. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss out on valuable trading content. Also, drop a comment below if you use SSI in your strategy and let me know what other indicators you'd like me to cover next. In the meantime, thank you for watching and I hope to see you in the next video. Happy trading.